Philly's favorite 100.7 FM and 99.5 HD3. What's up, everybody? It's Chris. We're getting started with Real Talk with the real estate diva, Desiree McDuffie. And today we got a special show. We got a full studio today. We'll be talking about financing for renovation and specifically 203K loans. And trust me, this is one you want to take notes on. We got a great show in store for you. So get ready, stay tuned. Let's go.
This is Desiree, Real Estate Diva McDuffie. I am here with another episode of Real Talk with the Real Estate Diva, and I have an awesome show for you today. We have Corwin Jackson, owner and CEO of Core Inspection Group, and we have the Mortgage Goddess, branch manager at Acre Mortgage, Miss Qiana Montgomery.
Hey, hey.
Hey, hey.
Hello. Welcome.
Thank you guys so much for coming in today. We are going to be discussing renovation financing. Okay, there's a lot of people calling and asking about renovation financing. Can I buy a house that is in need of full rehab? Yes, you can. And we are going to tell you exactly how you can do it. Right, guys?
Yes.
Got it. Yep. Let's do it.
Let's do it. All right. So let's start there. Like, what is 203K financing?
So 203K is a special type of FHA financing, which is a government loan. FHA helps buyers get in when they have a lower credit score, lower money to buy with, higher debt to income ratios. So it's a special loan that helps people get in when they would normally not get in. And then 203K is a special subset of FHA that allows you to buy the house and then renovate it. So it's really, really a game changer.
Okay. And so, for instance, if someone wants to purchase a house and it needs a full rehab, they can contact you to get special financing for it, because typically they wouldn't be able to get financing on such a home, right?
Exactly, because FHA has guidelines where the house has to be in a certain condition. So therefore, it wouldn't pass unless you had this renovation loan to do the renovation before you buy the home.
Okay, now how would a person qualify for this type of loan?
So the first thing you want to do is speak with a lender, such as myself, that will help you navigate things like your income, your debts, your assets, your credit scores, and go through all of that stuff to see what you qualify for.
Okay. Is the process pretty tedious or?
No, but I try to make it as easy as possible by making a plan. So sometimes, people will speak with a lender and they get intimidated because the lender may be like, you're not ready, and not help them. Mm-hmm. But if I speak to clients and they're like, I have this issue with my credit, or, I need more money saved up, we can have those type of discussions and make a plan for them.
Okay. So from what I remember regarding the 203K loan process, they qualify for the acquisition of the home, mm-hmm. as well as the renovation cost of the home, and it's all lumped into one loan, correct?
Yes.
And then the house must appraise at a certain amount.
Exactly.
Correct.
Right.
Can you break down that process or how that works?
Right. So you have what you call the after repair value, which means basically what is the house worth after you renovate it. So with FHA, they're very generous with that because it's used for home buyers that are going to live there. They are allowing the after repair value to not necessarily be more than what you're putting in and purchasing. So they allow you to go to 105% of what you're putting in. So that putting in meaning the purchase price and the renovation cost, because they allow you to basically renovate the house into your liking. So maybe you might pick some higher end finishes that may cost more and only mean something to you and doesn't actually add value, but they allow you to do that.
Okay. All right. Good. So guys, just remember that your loan amount will be for the acquisition as well as the cost of the renovation of the home. Exactly. So for instance, people, as a real estate agent, a person may contact me and they may be pre-approved for, let's say, $250,000. Mm-hmm. And then now they want to go out and look at and buy a $250,000 house that needs rehabbing.
Right.
Well,
they're already at their max.
Yes, it's not going to work. So your pre-approval has to include both amounts, correct?
Yes. So we have that conversation of, I like to start people with not necessarily a full rehab because that's a lot. And if you're a new home buyer, that may be a lot for you to take on. So we have those type of discussions of what is their time to oversee such a, renovation, so that I can guide them on what type of renovation they should look for and what type of budget. Because I actually flip houses, so I can tell them, okay, that's going to cost so much money and take so much time. Maybe we want to look at maybe a budget of $60,000 instead of $150,000, which is a lot to take on.
Yeah, I always recommend to home buyers who are thinking about getting into the flipping game and all of that, that this, obviously the house has to be owner occupied for a 203K, right?
Right.
But if they don't have any experience with rehabbing a home, this is the best way for them to go because there's so many eyes.
It can be really overwhelming. So what the government essentially says is, hey, if we're going to lend you money to purchase the home and then an additional, sometimes it's $60,000. Guess what? We have a project right now and it's over $200,000. So if we're going to lend you the money for the acquisition and then the renovation, guess what? We're also going to require that you hire a consultant. So that's where the HUD consultant comes in place. And a big piece of what we do is the contractor vetting piece.
Yep.
Because a lot of people, guess what? They've never worked with a contractor before. As a matter of fact, I was on a call with a plumber today that also renovates his own properties. He's been working with contractors for many years, and right now he's just having challenges with work that was supposed to be done and wasn't completed the right way. So when you have a consumer that's not really familiar with, guess what? They don't know the difference between an electric panel versus a computer.
Exactly.
They have no idea, what that cost is going to be. So we're there to really close that gap, help them with the contractor vetting piece, the project management piece, making sure we have the correct permits coming in. So that's really where the HUD consultant is coming in and getting involved at.
Yeah, so
Absolutely.
So key.
It's a second set of eyes on the process, right?
It's a second set of eyes. It's a
right?
second set of eyes. And sometimes, a lot of times, the contractors are looking to get paid on, where work has not been completed yet.
Exactly.
And that's really what we're there for. I know the three of us all have some familiarity with renovations. Little known fact, the first property that I ever purchased was using a 203K renovation loan.
Really?
Awesome. Yep, many years ago. So what I want people to appreciate is, if you're looking at getting involved as an investor, then this is a great opportunity for you, right? Because you're going to have someone that's kind of hand-holding you, teaching you how to communicate with contractors, contractor vetting. There's a piece called the feasibility study where we're working to understand, okay, how much we're putting in here, and then where is it going to appraise afterwards, right? So there is there's a lot to be learned during that process. So for all investors that's looking at getting involved, it's a great opportunity for them.
Yes, absolutely. You get to learn the process. I know my first property, I was 25 years old. I had no clue as to what to do, how to hire contractors. The whole reason I got the house is because my dad was supposed to help me with the renovation, but he had a stroke the same month.
Oh, man.
I purchased the property.
Wow.
So now here I am.
So you really had to grow your wings on the way down.
Yeah, and I lost a lot of money, like a lot of money because, took a recommendation from someone. Okay, first person I talked to, okay, you're hired.
Yeah.
And I mean,
No vetting process.
No vetting process at all. And when I tell you, they completely took advantage of this young 25-year-old girl who had no experience in this. So that's why I said, if I could go back, I certainly would have used the 203K process. And that's what I explained to a lot of my clients. They say, well, I want to buy a house that needs, a rehab. And, because they understand that a lot of times you can create instant equity in the house. And, that makes sense. But if you are trying to do this on your own and you're hiring all the wrong people,
then it's going to be a challenge. Yeah. What I can tell you is a lot of the only your seasoned contractors will be involved because there's an upfront cost when contractors want to get involved. And using a 203K breaks the first rule of running your own contracting businesses. Never put up your own money.
Yep, there you go.
Yep. So contractors are really wary about that. So a lot of times if I'm engaging a new contractor, one of the things I can really sell them on is, well, you may have to put up some of your own money, but the money is essentially guaranteed as long as the work is done right. Because one of the things that we don't, we don't talk a lot about, particularly as home inspectors and realtors, as lenders, is guess what? Contractors get burnt sometimes too. Sometimes contractors will go out, they'll get the work done, and then they'll have, a client that doesn't want to pay them or wants to pay them less, or now that the work is done, they're trying to negotiate. So guess what? A lot of times I'm in that conversation as well, where a client may not want to sign off on something, but we can revisit something called the scope of work and say, hey, this is what the contractor was asked to do. This is what he provided. So guess what? I'll put my John Hancock on it to release the check. So it's really great being able to work with some of the better contractors, because what we all want, right, as the realtor, as the lender, we all want happy homeowners.
Absolutely.
Right? If we all have happy homeowners, then guess what? They're going to give you repeat business. They're going to introduce you to your families and friends. And this career that we love so much, which is real estate, is going to continue to move forward.
Absolutely. Absolutely. One of the other aspects of doing a 203K loan, as far as the consultant is concerned, because it is a FHA product, certain repairs absolutely have to be completed, correct?
Yeah, and I'm glad you brought that up. That's a good sticking point, because a lot of times we'll get the client, they're coming in, and the first thing they're thinking is, hey, hardwood floors, stainless steel appliances, granite countertops is typically what they're looking for. But as a HUD consultant, there are certain requirements, things that they'll go on the bid as mandatory repairs. Some of them may be lower tier safety items, such as uneven walkways, missing railings. We love it when settlement is held up because of peeling paint, right? Doesn't that really, we love nothing more than that.
So important.
So what we're seeing more and more is realtors really use this as a tool, because sometimes you have someone on the listing side or the seller who may not have the money out of pocket to get a roof repaired.
Absolutely.
Windows that are cracked and damaged. Sometimes you don't have the resources to get that done. But if they go the 203K route, then they'll get the funding and they can, get the settlement on time. And guess what? There are rules where sometimes a HUD consultant isn't needed, So if it's below $35,000, then, the HUD consultant isn't needed to come in, and, sometimes the paperwork can get done
isn't needed, but still recommended, in my opinion.
Hey, it is recommended. All right, I'm going to put an asterisk on the last comment. It's not required under $35,000, but some lenders will still call us to come out. At that tier point.
Yeah, so. Especially for people, like we said, that really have no experience. It's good to have a consultant to really take a look at the project. And,
absolutely.
You made an excellent point for sellers as well. As a listing agent, if I do encounter a property that needs, some fixing up and rehabbing and all of that stuff, the seller contacts me to put the property on the market. That's one of the marketing strategies,
there
right? I put it out there as a potential for a 203K for
absolutely.
Rehab.
If not, they're going to be asking all those things to be done prior to settlement, and sometimes the seller just don't have the resources. One more tip that I want to give the folks: if you're considering a 203K renovation process, the first thing that you want to do is reach out to your loan officer. Of course, that should be Qiana Montgomery, because she's someone that's really familiar with the process. She's been down this road a few times. You can get a direct answer from her. I've been in the trenches with Qiana where we're trying to get something in settlement, and she's just answering the emails, getting the paperwork done, make sure she's I like to call, there's a term that I use, with my own team, and it's over communicate. We like to over communicate. We're going to make sure that thing is sealed down. But one of the mistakes that people make a lot of time is they will call a contractor out before they call a HUD consultant. And that's a mistake for many reasons. Contractors are really good with fixing stuff, right? But sometimes they're not really good with paperwork and documenting things in the manner that they should be.
Absolutely.
So where a contractor is going to say, hey, guess what? I am going to completely renovate the kitchen. The HUD consultant is going to say, okay, we're going to have laminate flooring. We're going to have Formica countertops. We're going to have wood glass cabinets. We're going to have a 4-piece appliance package to include A, B, C, and D. so that HUD consultant is going to write it up in a manner that's digestible to the underwriter. And more importantly, it's going to be very specific so that the client knows what she's
Exactly
getting.
what they're getting.
Because sometimes the client can have a vision on what her finished kitchen will look like, right? And then the contractor will have a different vision. So how do we close the gap, right? We do that by creating something called the scope of work or scope of repairs, where we're detailing everything. Whirlpool 4-piece appliance package, farm sink, so forth and so on. And then if that first contractor, for whatever reason, if you're not too comfortable with him, the next contractor is working off of the same exact scope of work. So you can really compare apples to apples. Hey, what's being done? You can compare labor costs, material costs. So that is a long-winded way of me saying, bring that contractor. Bring that contractor in later. Let that HUD consultant come in, understand the what you're looking to get done, and then he's going to write it up in a manner so that the contractor can price it and is digestible to the underwriter.
And then the contractors will then bid pretty much on.
Then they're going to bid, because we're looking for, or the underwriter's looking for labor and material costs on each of those items. And I tell you what, that's a big piece of the vetting process, because we're trying to understand how long is it going to take this contractor to turn this paperwork around.
Oh, absolutely.
Right? How long? Because if we're looking for a draw, we're trying to get the close and all those types of things. Sometimes they have I could tell you a big piece of my job is really telling the client this isn't the contractor that you want to use. Yep.
Again, guys, this is Desiree, Real Estate Diva, and this is another episode of Real Talk with the Real Estate Diva. We are here with Corwin Jackson of Court Inspection Group and the mortgage goddess Qiana Montgomery with Acre Mortgage. And we are discussing renovation financing and how to get it done. So to continue with what you were saying.
So, one of the questions that I get a lot is, hey, well, I know that you own Core Inspection Group. You guys have a home inspection firm. What's the difference? Like, why do if I'm going to get a 203K HUD consultant, why do I need a home inspection done? That's one of the questions that we get a lot. Well, guess what? When a HUD consultant comes out, he's not going to get on the roof. He's not going to test the heating system. He's not going to remove your electrical panel. His job isn't to figure out, hey, what's working properly versus the things that need to be fixed, repaired, replaced. His job is to understand is the house suitable for the FHA's needs, and if not, what needs to be done. Now, if you have a home inspection, the home inspector is going to come out and he's going to check the house for deficiencies. He's going to walk the roofing system. He's going to troubleshoot the heating system. He is going to scan the electric panel for heating, all those types of things. So we ask two very different questions depending on what hat we're wearing. If I'm going out as a home inspection, which I will be probably 30 minutes after leaving here,
you own it.
My question to that client is going to be, hey, is there anything that you're particularly concerned about that you may need to pay additional attention to, right? If I'm going out as a HUD consultant, the thought becomes, hey, what is your goal once the project is done? What do you want the house to look like? What is your finishings? So it's two completely different functions.
Exactly. Okay. So one thing we were talking about sellers and how this can play in for them, you can do a cash out 203K, which a lot of people don't know. So a seller
What's that? Yeah, I don't know about that. What's that?
So the problem is this, right? You have a house, it needs a lot of repairs. You're not able to get a cash out refi because it's not going to pass the appraisal. So what do? If you have to do a 203K, it's based on what the house will be worth after you do the repair. So you got some equity there that you can tap into to repair the house. Okay. So a seller could come in, like you said, the same way and not have the funds readily available, but they can do a cash out refinance to get the money to renovate the house and make the house worth more. So you can do it kind of two ways depending on the situation. If they're not able to get approved, then I guess you would have to put it on the market and then they just sell it as is. But they would get a lot more money if they did it themselves. So it's a piece for selling agents to sellers, all of that stuff.
Okay, you just gave me some. Yes, I like that. I'm going to use it.
Yes, 203K is a beast.
Yes, I didn't think about it for that because one of the other goals, that I have, and one of the goals of this show is not just to talk to home buyers, but also to help people who already own their home to be able to maintain ownership and retain ownership of their home. So we had a person on here, we had one of the council women on about 2 weeks ago, Catherine Gilmore, and she was discussing the renovation program that's coming available to Philadelphia residents, where they can get up to $50,000 in costs to rehab their homes. So, I always talk to homeowners about the 203K to use it just as a homeowner, period, as well. If someone has me come out and they're like, they really just want to sell because they can't maintain the, maintain the home, I give this to them as an option, not necessarily to sell it, but listen, if you don't have to sell and you really want to stay here, you could do a 203K, renovation loan on a home that you currently own and still live in their home, stay there, but I never thought about using it the way
to sell
you
it
just mentioned.
And have it done. So, and you'll get more money. So that's the thing. So they could do it either way. But if they do it, of course, now they have the equity and they can sell it for more instead of selling it as is and not getting really that much money. And then the buyer getting all the benefits. So you can play it either way.
Girl, you just helped me out a lot.
Strategies.
And my clients.
One more thing I was thinking about the 203K is that we didn't go over the down payment. Now, a lot of people know that the down payment for FHA is only 3.5%, but some people don't know that. And it's the same for the 203K. So it's major because any other type of renovation that you're doing typically is going to be a lot more. So that is powerful to be able to buy a house and renovate it and still only put down 3.5% of the loan amount.
Absolutely. And what are there any additional costs? Like the consultant, is the consultant, an additional fee, and how exactly does that work?
So there is a fee when you first sign on for the HUD consultant. After that, like all of the draws, so a draw is when a contractor completes a certain amount of work, the consultant will come out to review the work before a check is released to the contractor. The HUD consultant is also paid for that inspection, but all of those fees is also wrapped up into the cost of the loan.
Okay.
So that's the great part, is that you don't have too much upfront costs. They can roll in mostly all the extra costs.
And you can roll in rents as well, right? Like if a person has to rent, I know years ago at least, I had a client.
Mortgage, you mean the mortgage payments?
The mortgage payment, there you go. The mortgage payment. Like if a person is renting, they don't have to automatically just start paying the mortgage payment as well as their rental costs where they are, they can roll in the mortgage payments.
I think what you're thinking is they usually give them, I think Qiana is up to 6 months where they'll say, okay, we'll push off the mortgage payments to that point.
Yes.
You can either roll it into the loan or, depending on the lender and the situation, they may allow you to not pay till it's done. So it just depends. Those are discussions you can have with your lender.
Okay, so that's lender specific. Got it.
Yeah.
Okay.
Yeah. So just to kind of close the picture for most potential home buyers out there, because I know most people have the goal to purchase a home in 2023.
Yes.
Just to paint that picture. So this tool is used if you're going out to a home. It's in the right neighborhood. It's in the right school district. It has a curb appeal for you. But guess what? The bathroom is outdated.
I was about to say, yeah.
Or you really wanted to get a finished basement, but it doesn't have one. Or you really want to upgrade that kitchen. Otherwise, you're in love with the house. This is where we really see this tool used. So that way they can get into the house and really make it a home, as soon as they take ownership. And Qiana always like to say, sometimes it's all three.
Yeah, sometimes it's everything ugly. Just do it all. Bathroom, kitchen, basement, do it all.
You're just coming in with a blank canvas at that point.
Exactly.
Yeah, absolutely.
Yeah, I've had clients use it to just install a bathroom, to add a bathroom, so is there a minimum cost?
So there's a couple different ways. So FHA allows you to do up to like $5,000 without it being a quote unquote 203K loan.
Okay.
That you can put, but again, everything has to be stuff that, for that, it would have to be stuff that is not safety related. That you can move in and it will be safe. But it's just like you said, just want to do the bathroom, and they give you $5,000 to do that. And then you can do your streamlined FHA 203K, which is the one we're talking about under $35,000, where you don't need the HUD consultant. There's a lot more streamlined, as they say, because you're doing a half up front and half at the end, and not like all these different draws and inspections and blah blah blah. And then you got over that $35,000, where now you're getting into that full 203K and all of that stuff. So
is there a maximum rehab amount?
Well, you have to stay within the FHA maximum, loan amount or whatever. So that depends on how many units is in the property of that max and where the house is at and all that stuff.
Yeah. So, guys, did you hear that? You can buy a multi-family and use this as well, correct?
Yes,
Up to 4 units, right?
Yes, I've had clients do that. Even a commercial mixed use. I had a client that bought a triplex with the commercial space on the bottom and 2 apartments up top, and to renovate, got the money to renovate it. Now, you do not get money to renovate the commercial space, but you can do a commercial mixed-use property under FHA and do the renovation.
Nice.
All right, guys. I see a lot of smiles out there that's listening to this radio show. We're going to remove just a small bit of the fantasy. This is not if you want a swimming pool, okay?
Yes, exactly.
This is not if you want a swimming pool. I had a young lady. It broke her heart. She wanted a surround sound system installed in her living room ceilings. She was trying to get her movie theater going. This is not for that. So sure. But what are some of the things that people do use it for? Again, is roofing systems, bathrooms, kitchens. So
air conditioning.
Systems. But we'll have to figure out some other creative financing for that swimming pool you're looking forward to. Yeah.
Exactly.
So really quickly, there's another product, Homestyle, right?
Homestyle
That's the
renovation
conventional
version.
product. So what's the difference between the two? And are there any differences with regards to the consultant relationship with any of that, or qualifying for the Homestyle versus FHA?
So the HUD consultant is on FHA like requirements, not so on the Homestyle renovation, but you still would want to if you're doing that level. The difference always between conventional and FHA is the guidelines are stricter on your conventional. So, that's one of the things there. So that's the major difference is FHA will let you have, again, those lower credit scores, that higher debt to income ratio and those type of things. So,
okay.
But that is another renovation loan that is a game changer, is the Homestyle renovation loan.
Okay. Are there any other renovation products that you would offer?
For your investors, I have a 0% down fix and flip loan. Now that's a temporary loan, and it's only 12 months because you're going to want to refinance out of that. So that's another benefit of the Homestyle renovation and the FHA is that you get into one loan and you can hold it for 30 years, fixed rate. So the difference is when you're an investor, you're going to do a temporary loan, and it's only 12 months, and then you're going to have to do a cash out refi or sell the property. But you also have those options once you get into investing.
Absolutely. So the Homestyle and the 203K FHA loan, they're for owner occupants. You have to have full intention to occupy the property, correct?
Exactly.
Yes. It is not for investment properties or flippers.
Yeah.
Right.
Yes. But
you get a 30-year fixed rate. So that's the major benefit. You're doing one loan, all of it together, and then you got a lower rate as well. Because if you're doing a temporary loan, it's a higher rate. That's why it's temporary. You want to hurry up and get in and get out because your interest rate is going to be like double what it would normally be on this FHA or the Homestyle renovation. So those are the difference between when you're doing an owner occupancy and when you're an investor.
okay.
So sure. So while this wasn't created for investors, you have your new investors, who may be purchasing a duplex, maybe purchasing a triplex. It's their first home, and guess what? They're looking a house hack.
There you go.
Right,
Yep.
where they're going to live in one of the units, and they're going to rent out the other unit or the other 2 units. So essentially, those other, that's how they're getting the mortgage paid.
Absolutely. And that makes sense, right?
Perfect
That
sense.
actually, I highly recommend that. I wanted that to be my first purchase, a multifamily, live in one unit, and
you get spoiled. The problem is, we know we should be saving that money, but what are we doing with it?
Yeah, well, that's another situation, another show. We're gonna have some finance people on here to tell us how to manage our money, right?
When you start making all that money, what are you doing with it?
Yeah,
Don't go buy that G-Wagon.
Yes.
Absolutely.
What happens when you have no housing payments? Like, I could just spin it up. No, you're supposed to be planning, but we'll talk about that.
Exactly. Is there any other differences between the 203K and the Homestyle loans that a person needs to be aware of when it comes to the consultant, at least?
Well, I'll say this. We know if you're purchasing a home that's in complete distress, you're looking at a full renovations. Most of our investors, most of our home buyers, they're not going to get a home inspection done But what our investors are doing is they're calling for a termite inspection.
Absolutely.
They're calling for a sewer scope inspection. So most people don't know if you have a failed waste line, that's going to cost anywhere between $10,000 and $15,000. So when we go out and we scan that waste line and it's fine, what did they really pay for? They pay for peace of mind, right? So just a thought where I know sometimes people aren't looking to get a full home inspection done. There are some other ancillary services that that we provide that can be very helpful.
Yeah, so let's speak to that really quickly, Corwin, because you're not just a HUD consultant, right?
Yeah.
You do full home inspections, and I wanted to have you on here before to talk about the home inspection piece. So while we're here, while I have your attention and my listeners have your attention,
So sure. So with Core Inspection Group, we are a large Philadelphia-based home inspection firm, but we go as far west as Pottstown. We're actually in South Jersey and Delaware.
Okay.
One of the beauties, and by the way, we are the premier inspection company because we have more than 1,000 5-star reviews. So the reason I say that's important is because you're more than likely to have a exceptional home inspection experience with us than any other. Shameless plug.
Hey, listen, I can as well. I could as well.
But sure. So, home inspections don't need to be a scary thing. One of the beauties about the home inspection is you get a lot of first-time home buyers, and there are just things that they don't know. Like what type of, I'll give you an example. I was on the property inspection the other day, and there was a roof leak. So, of course, most home buyers are going to think that, I must need to replace the entire roof, that we have to tear it off. And it's not the case. So we had to have a conversation with her about flashing components, why that maintenance is required every 3 years. So it's just things that you learn.
Was that my listing? You just
I wasn't going to say nothing.
You know what? I was 2 doors from your listing the other day. I started to take a picture. Boom.
You guys inspected one of my listings.
And send it over. Send it over to you. Yeah. Yeah, but you don't know that because you didn't get the inspection report and you didn't see everything on there. Yeah. Anyway.
Not yet. Get ready.
So sure, like there are some times because we know that home buyers can be easily overwhelmed. So when we talk about one of the largest mistakes that people make during a home inspection experience is not attending the inspection.
Yes.
Because there's so many things that we can explain that could be alarming, right? But then we can confirm costs, maintenance required, that type of deal. And guess what? If there's an emergency in the house, where do you turn the water off at? Where's the main panel at? How do you turn a power off in a house?
Can I give an example?
The service main. Absolutely.
When your guy came and inspected the house that I just bought to live in. Woo, woo. I never heard of a electric heating forced air system.
It's a heat pump.
Heat pump, right?
Absolutely.
So he had to explain that to me because I did not even know that. And I'm like, what? I bought houses. I'm used to electric baseboards. And so I'm like, what is this? And he's like explaining to me. So luckily I was at my home inspection because he had to tell me some things about the system and that I should be prepared for because it's a little bit different than a gas.
Yeah,
absolutely.
I always tell my clients, this is your time with the home inspector to learn about the home
everything about the home
purchasing. So you absolutely must be there.
100%.
Absolutely.
100%.
And I love the fact that you guys do take time to educate the client.
Well, I think that's the important piece. So again, when you talk about most contractors, most trades professionals, they're really good with fixing stuff. I hire people based on their personality, based on their ability to interact. Because when we talk about the trades requirements, we can teach those things. We can teach the difference between knob and tube wiring and Romex and single strand aluminum, all those different electrical components. But you can't teach someone to take the time, sit down and talk to people and explain that. So it's really important when you're bringing people on board so they can assimilate within the culture.
Okay. Again, guys, you are listening to Real Talk with the Real Estate Diva. This is Desiree Real Estate Diva McDuffie, and we are talking about renovation, financing, and home inspections with Corwin Jackson with Core Inspection Group and the mortgage goddess, Miss Qiana Montgomery, branch manager at Acre Mortgage Group. Yes, and these are two awesome experts in their fields. I highly, highly recommend both of them. I've worked with Corwin for many years, Ms. Montgomery. We were going to work together on one crazy transaction, and it didn't happen. But
the next one is a go.
The next one is a go. But I still her knowledge. And here's the thing: I was able to get in contact with her, and so many loan officers, you're not able to do that quite often. So as Corwin stated, she is on top of her game. So I highly recommend her as well. So.
Hey, one of the great things that I'm really excited about now is buyer concessions is back.
Yes. Oh, yes. Yes.
Hey, let's clap it up. Let's clap it up.
sellers aren't going
Buyer
like that,
concessions
but-
are back because for a long time, I was getting a message that, hey, I have someone which is the scariest thing ever, not getting a home inspection done, or even if they are getting a home inspection done, it's being said that guess what? It's for informational purposes only.
Yes.
We've heard that for a long time. So when we say buyer concessions are back, it means quite a few things. Like, it could mean in seller's assist.
Yes.
But one of the areas that we're speaking to is, when things come up on a home inspection, it puts the buyer in a position where they can negotiate.
Absolutely.
So now you're never buy a house without a realtor, guys. If you don't remember anything else from this conversation,
Thank you.
do not buy a house without a realtor. And one of the great things about that statement is, guess what? You're not the one that pays for the realtor on the buyer side. You're not going in your pocket to pay for them. But when we say that the buyer concessions are back, it means that you're going to have a home inspection done, and typically they're going to find stuff. Every now and then, that inspector could bump into something that could offset the value of the home.
Yes.
Well, for a long time, because primarily due to low inventory, we were in a climate where, hey, take it or leave it.
No house.
Yeah. New roof, old roof, no roof.
Whatever.
If you don't want it.
Somebody else does.
Someone else is getting
And they're
it.
going to pay $10,000 extra for it. Like, what?
$100,000 sometimes.
right.
People are crazy
Yeah,
numbers.
but but the climate is shifting where we're moving more over into a buyer's market where and Des, you can talk a little bit more about this, but you guys are able to negotiate a little bit more to get some relief to the buyers.
Oh, absolutely. We are shifting, and when you mentioned seller concession is back or buyer concession, this is like
Not for the
the sellers are not happy about it. So I had to clap, but halfway clap.
They're like, what happened to all the
halfway had to clap on that one. I had to, for my
get a home
buyers and then.
Change my price.
Yes, exactly. But yes, the market is definitely shifting. So, one of the things on the seller side, one of the conversations that I'm having now with sellers that I necessarily didn't have to have even, a year ago is making sure that this property it shows very well. If that makes sense. If there's something that needs to be repaired, you need to go ahead and get it repaired before we even put it on the market, if at all possible, because home inspections are coming back.
You don't want the buyer to come in and find it.
No.
If the buyer finds it, that puts him in a driver's seat. He's going to make a determination. So we're doing more pre-listing inspections now, and I'll share a really quick success story. We're on a pre-listing inspection. They had a lead service main, and of course that can be scary for any homeowner, right? Or any particularly a home buyer or someone that's coming in with kids. But what we were able to recommend to that client is go ahead and get a water quality test done, right? So she got a water quality test done. It came back clean. She listed that in the seller's disclosure along with the documentation for the water quality test. So, of course, when that next buyer comes along with the home inspector, they don't even want to hear about the lead service main because guess what? You're already aware of it, and we've already provided with documentation.
Absolutely. So. And it puts a little, how can I put it? It takes a little pressure off of the seller, when they are going to sell their property, like you said. And I always tell sellers all the time, the more they see, more buyers see, the more home inspectors see, the more they're looking for, the more of a problem we're going to have. So, let's eliminate as many problems up front as possible. But it definitely is a bonus to the buyers right now because, inventory is still fairly low, but you don't have as much competition right
that's
now.
The thing.
Yeah, we don't have that competition. But
rates is up there and kind of cooled off some people. Like, let me sit on the side, but you shouldn't. But that's just naturally what happens.
Yeah.
So you're really, really smart investors. They are buying when everyone else is not.
Absolutely.
How about that?
Right?
And homeowners, really.
And homeowners. And homeowners.
Ones are still buying now.
Yeah, they're buying when everyone else has kind of slowed down, where they feel like like the market is at a standstill because guess what? The seller doesn't have, you're not competing with as many offers on the seller side. Is that right?
Absolutely. You're definitely not competing. Now, we still have some multiple offer situations, as in any market, you're going
Y'all
to
still
have
get
them.
fancy on them buyers sometimes.
What you got? What you got over here?
and let them
Yes,
know.
I mean the last few that I listed, we did end up getting multiple offers on it, but that all has to do with anyway.
I got you.
I'm not
I
going
got
to toot my horn with my marketing strategies and all stuff.
Hey, this is the platform for that too.
Yeah, got time.
Yeah, but
Yes, list with the real estate diva. She'll get you that highest money back.
yes. But even with the interest rates, and Qiana, you can definitely speak to this, right? Because I remember in 2009, my client got an interest rate at 5.25 or whatever, right? And they were pre-approved with another loan lender that was going to give them like a 6 point something. And that lender said, no, there's no way that they can get a pre-approval or purchase a property with a 5.25 interest rate. But that was a good interest rate then in 2009. That was so today's interest rates are similar to where they were then. Right.
But people they're just comparing it to last year or the year before.
Yeah.
They don't realize we've been here before. This is not new. They're like, oh my God, I can't buy. It's just too high. I'm like, we've been at double digits before. But
I think people need to appreciate it's not that the interest rates are high. We're really normalizing, right? Where,
absolutely.
You guys can bank on, we're not going to see those interest rates as low as they were, 2 years ago, 3 years ago, right?
Because it created a frenzy. We can't go back to that. It was crazy. You had people with open houses where people would lined up down the block. People were not getting home. People couldn't get home inspections. I remember I had to compete. Like I couldn't get a house for a long time because they kept wanting me to waive the home inspection. And me being in the industry was like absolutely not. I'm like I'm not doing that. But it was almost you had to do that, pay over, and not get a home inspection and not care about what the appraisal said. Like it was crazy. So when people say, "Oh, I missed the boat because I should have bought last year," I'm like, you didn't. You missed out on a lot of craziness. So
how about that?
It was out of control, and I was like, I was kicking myself for waiting till then because I had talked about it a year before. But there's never any perfect time to buy. So I always tell people that like when you're financially ready, just go do it. Don't sit there and try to talk yourself out of it about I should have bought here. I should wait till there. It's cyclical. As the rates are going down, then the home prices are coming up. So if you wait, like it's not like you're just gonna jump in and swoop in at some perfect time. It's really hard to time that,
Yeah, and I tell a lot of buyers who are considering buying right now and they're a little concerned about the interest rates. Listen, the interest rates are what they are right now. We know that some of the competition, as you stated, have gone away, right? So home prices are slightly coming down, right? Down. So now is an excellent time for you to buy. And here's the thing. If you're really not comfortable with the interest rate that you get, if they go down, you can refinance.
How about that?
Right.
But
or you could buy the rate down.
Yeah,
that's
the new buy down.
Like?
Now, go ahead, talk about that.
There's a lot of different options with it. You could just do a basic buy down of your rate for the whole 30 years, or you could do a temporary buy down to put some little bit of money down and get for the next few years and then refinance. So there's a couple different things. So the whole thing is, like I said, there's no perfect time to buy. So just talk to your professionals about all the benefits of right now, like what is going on right now, and not be concerned about what may happen and what happened last year. It's not relevant to you.
I think one of the things key about what the mortgage guy has just said, talk to a professional. A lot of us are taking advice from that, that uncle, that aunt. Sorry, auntie. That,
not an expert. You don't have a license.
Uncle Remus, who bought his house 20 years ago.
Yeah, like he knows nothing about this market.
Even guess what? 5 years ago, we were in a completely different market, and everyone's scenario is going to play a part into like their buying power, their their credit score, the neighborhood they want to move in. There are so many specifics. That you guys really need to reach out to an expert.
Absolutely. So one quick question that I didn't ask, to go back to the 203K process, if I'm a home buyer and I want to purchase a property, can I do my own renovations, right? And, get paid to do it on my property? Or can I hire Uncle Remus, who is contractor around the corner who
No,
Uncle Joe
and
referred
no.
to me.
No and no. But sure, so there is one thing that they do allow you to get done yourself. If you wanted to do your own painting, you're not going to get paid for it.
Okay.
Yeah, you're not going to get paid for it. But you can expense the material cost for that, and then you'll you can complete the priming and painting yourself. What I'll tell you about the how'd you name it, Uncle
Remus.
We want to be careful with Uncle Remus.
Okay,
He's
Uncle
also
Remus.
he works for Comcast. He's a Bitcoin expert. And nothing
Drop
wrong with
shipments.
any of those things. But you got to keep in mind the government is lending behind the acquisition and renovation. So the vetting process is stringent, and I can tell you what, I'm learning more that's coming not just from the contractor, but the lender as well, right? We're there. I've seen contractors denied or at least put on hold because their insurance is expiring within the next 60 days. They're saying, hey, we want this renewed right now. So Uncle Bob likely wouldn't have that, insurance required. So
Absolutely.
And the licensing that they're looking for. They're looking for, letters from your bank. Not for me, but I've heard of a lender turning down a contractor because of their credits.
Yeah, they're going
what?
sometimes. Yeah, one of my best contractors. They were asking him for. He needed to prove that he had credit for 10% of the total renovation cost. And his thought was, him and I had a sidebar conversation. He said, "Look, dude, I'm not looking to get approved for a loan.
Right? Like, what is going on here? Am I getting a loan or the other person getting a loan?
Who's getting a loan here?" So, but I'll tell you, that line of questioning keeps a lot of the unsavvy contractors, we'll call it, from getting involved.
Absolutely, because one of the things with a 203K contractor is that they have to put up some of the money up front, so they have to.
Yeah, so they have to put up. Typically when you go to settlement, they're going to go without getting any costs allocated to the funding, and that means that they're going to complete. They're going to complete a component of the work before they call for a draw. Some lenders are becoming more lenient with this, where they are allowing a material draw. That is lender specific,
but not their labor. So they still got to have, like they got workers and stuff like that. So again, like you said, it's keeping your less savvy, contractors kind of out of there, and those are the ones that sometimes will cause you headache. So
100%.
So if a person wanted to go through this process, right?
Yeah.
Would you guys be able to recommend or refer contractors to them, or is that
100%?
Like a sticky?
Yeah,
Okay, good.
No, 100%. We can refer contractors. Sometimes we even have what's called contractor bid meetings. What this means is once a feasibility study is done and we have a scope of work completed, we will earmark a 2-hour window where we'll invite different contractors to come over. Typically, we'll have we'll invite 4 to 5, 3 will show, and then that gives a client the opportunity to have a one-on-one with each of the contractors. And listing agents love this. They absolutely love it because now we have one appointment time where a contractor is coming, getting all the information that they need, where the project is going to make sense to the contractor as opposed to the listing agent or the seller constantly getting calls and emails. Hey, we need access. Hey, we need access. Hey, we need access.
But let me say, that is not normal for your HUD consultant. So you guys better hit Corwin up, because that is not.
I was about to say,
no HUD consultant
contractor bid meeting.
Like that's some savvy stuff you got going on there, and you're not going to get that.
We're available. Look for the new brand 203K Consultant King coming soon, guys.
Okay.
Absolutely.
Okay, so we got the real estate diva, the consultant king, and the mortgage goddess.
Yes. Here we go. We gonna get it, or we gonna get it.
That's it.
We're going to get it. We're going to get it.
No other
Absolutely.
options.
Absolutely. Again, guys, this is Desiree, Real Estate Diva, with another episode of Real Talk with the Real Estate Diva. And we are here with Corwin Jackson with Core Inspection Group and what is it? The 203 King?
We can stay with Core Inspection Group for now.
Okay.
lock it in now. Let's just speak it.
Lock it in, right?
203K King. I see that hashtag 203K King. Already
exactly. And the mortgage goddess, Miss Qiana Montgomery with Acre Mortgage. So thank you guys so much for all of this awesome information. And I want our listeners to be able to get in contact with you moving forward, because I highly recommend each of them. Okay. Highly recommend each of them. So Corwin, let's start with you.
Instagram is at Core Inspection Group. Our direct numbers 215-987-7547. And of course on Facebook, you can just find me at Corwin Jackson.
All right. And I'm on Facebook under Qiana Montgomery, Qiana. It's Qiana Travels Montgomery, actually, on Facebook. And then on Instagram, it's at Mortgage Goddess Qiana, again, Qiana. And you can reach me directly at 267-701-1189.
Thank you guys. And again, this is Desiree Real Estate Diva McDuffie, and I can be reached at phillyrealestatediva.com. You can go on and register on my website and get awesome information about the home buying and home selling process, or you can give me a call on my office line, and that number is 267-238-2877. I am also on Instagram, Facebook, and Twitter, and all of the other social media venues at Philly Real Estate Diva. So thank you guys so much for tuning in. Hopefully this was helpful to you. And if you guys want to move forward, one of the key statements that was said today was speak with your experts, right? We are your experts. We will be able to give you the correct information about the process, whether it is buying, selling, renovating, whatever regarding real estate. Even if you're looking to invest, please reach out to us so that we can assist you. Okay? Until next week, be blessed.